Welcome to The Tax Factor, the top 20 business and investment podcast from Blick Rothenberg, the tax, accounting and business advisory firm. This week with Neil Insull and Matt Crawford.
Welcome to The Tax Factor, the UK's top tax podcast. I'm Matt Crawford.
And I am Neil Insull.
So, the budget, we mentioned it once, but I think we got away with it. Neil, are we going to be talking much about the budget today?
No. Yes and no. A little bit. I can't ignore it, but I don't want to. The so-called B word is not in my vocabulary today. And we'll leave it for the great and the good next week. There's a bumper edition of the Tax Factor podcast next week, and there'll be full details of Rachel Reeves' first budget as Chancellor. So I'll say just a little bit. I mean, there's been a lot of speculation, as we all know, over the last eternity, at least the last 6 months, if not longer, about what Labour is going to do, what Rachel's going to do. I won't go into the detail now, of course. We'll leave speculation to one side, but I think it was quite interesting, slightly amusing that Dan Needle, who is obviously a very well-known commentator on tax these days, has published 35 ways in which Rachel Reeves is likely to increase taxes. So I don't think it's going to be a short budget. That's all I would say. Hang on, I've said the B word. I won't say it again. So this week, Matt, we won't be talking too much about the B word, but I think you might want to be talking a little bit, I think, about Labour's plans for the Employment Rights Bill and maybe the tax implications of that. So I'm looking forward to your thoughts on that area of legislation that is likely to come in a couple of years' time. I wanted not to talk about the B word, but I just want to put it into the context of the bigger picture. So I thought I'd spend a few minutes, not too many to bore you, about what the government expects to bring in terms of taxes over the next year, in terms of 5 years, and what the spending might be and what the lessons from that might be for all of us, and in particular for Rachel as she launches into her speech next week. So let me just bring us up to date with where we are in terms of taxes. It will come as no surprise that the government raises a hell of a lot of tax, and that's been increasing significantly over the last few years. In 23-24, just to put into context, that black hole that Rachel's trying to fill of about 24 billion, 40 billion, whichever number you want to take, that's in the context of a total tax take of over 800 billion. So 829 billion was the amount that was raised by the government last year to March 24. That's a 5.1% increase on the previous year. 57% of that 800 billion is from income tax, CGT and NIC, and that is expected to increase significantly as well over the next few years if those, and they will, the frozen income, they'll continue to freeze the income tax thresholds. One area of tax that I look at quite a lot is corporation tax. And even you look at corporation tax combined with some of the other business tax like oil and gas taxes and taxes on banks. Last year it was 93.7 billion. And if even you go back 4 years, they're only collecting 60 billion. So you can see that there is not a problem in collecting quite significant amounts of taxes. And that's increased a lot over the last few years. We've had an increase in the corporation tax rate, new energy profits levy, the electricity generator levy increasing, in windfall taxes significant at some numbers. So tax is not a problem, it seems. That increases over and above the increase in GDP, which is broadly flatlining at the moment. So we're collecting around about 30% of the GDP in terms of taxes. GDP is roughly about 2.7 trillion. Tax is not a problem. Tax is increasing year by year and expected to increase year by year over the course of the next parliament. I mean, in terms of spending is, of course, over more than the amount that is raised. So even if you take the taxes and other government collections of public money, which increases to something like 1.1 trillion, we spend even more than that on government departments and payouts in pensions and welfare payments. Around about 1.2 trillion is expected to be spent in 24-25. And that includes things like 180 billion on health and 85 billion on education. And then 25% of the spend is spent on pensions and universal credit and so on. The other important number to put into the equation here is another hefty number, which is 74 billion on interest alone every year is paid on government debt. And that shouldn't be forgotten. I mean, as you can see, if you look at the difference between the spending and what the government brings in taxes and other receipts, there's a gap. And always is a gap. In fact, if you go back to 1970, there's always been a deficit every year except for 3 years. So as country continues to accumulate these deficits, we create huge amounts of debt, government debt, and that is going to be something like 3 trillion. I mean, these numbers pale into insignificance compared to the US, but 3 trillion of debt by 2028, 29, and we're going to pay interest on that debt. And the higher that debt goes, of course, the more interest is paid and the less there is to spend on government departments. So in the context of things, these are crazily high figures. And actually, if you look at the amount that we're talking about in terms of speculating about changes in capital gains tax, changes in inheritance tax, all this speculation about raising 1 billion here and there, you can see that these numbers really are a tiny, tiny percentage of the overall tax take and the amount that's going to be spent. And I think, we can talk about the B word in more detail next week, but we need to put that into context and the fact that there is this significant issue in terms of the overall ability for this government to create receipts and the amount that it's expected to spend. And of course, the problem overall is the fact that we aren't increasing growth. And I'm not suggesting we go back to Liz Truss's crazy economic policy, but there is definitely a time to think about how we can increase growth and put the economy on a sure footing. I mean, Rachel will have all those answers next week, and I'm looking forward to it. But my fear here is that, not only should we be having a tax factor podcast next week, we probably should have an Axe Factor podcast, because as government departments have their spend is being cut, I think we're going to see some axes falling on certain departments more than most, and a lot of unhappy people in different government departments. Sorry, I've gone on too much, Matt. I'm sorry about that. But
That's
okay,
Neil.
There's some context there.
It's not like you to go on too much. So, it's a first time for everything. But I love those statistics around the amount of UK tax take. My particular favourites, I must admit, are how virtually half of the whole UK's tax take is taken by PAYE and national insurance, both employees and employers. As everyone knows, it's my favourite tax, employment taxes. And I've always been of the view that employment tax professionals should probably get remunerated the same percentage as is taken in the total tax take, whereas, our corporation tax friends perhaps should have a little bit less, is my view on that particular subject.
Totally agree with you, Matt.
And of course, it's even better for our fellow podcaster, Roger Holman, who I believe is an inheritance tax guy. Should we remunerate him accordingly to what's taken in, then I think that would be about right for him, yeah.
Or we could remunerate him on death.
Maybe. Yes, we could. Yes, exactly. Yes, that's not a bad idea either. I'm sure he'd be delighted. He'd be delighted with that. But no, thank you. Thanks very much.
Let's hope he's not listening.
I'm sure he won't be. It's some fascinating statistics there, and it's also another thing that we talk about on the Tax Factor all the time is the complexity is going up so much. I think Nigel Lawson, when he was Chancellor, he had an aim of removing a tax every single budget, and since then, Gordon Brown was a pretty bad offender. He doubled the length and complexity of the tax code, and then George Osborne doubled it again. So everything has got significantly more complex. The Office of Tax Simplification published something that they said that they actually thought that doubling the length of the tax code wasn't necessarily making it more complex. I'm not sure I agree with that analysis personally. Anyone who's had to wade through the number of sections that we've got now or read things like the disguised remuneration rules would probably disagree, I think, on that.
They'll probably fall asleep before they got to the end of it anyway.
Indeed, yeah, no, it's good, but it's not exciting bedtime reading, is it, most of it? But the other thing I thought we'd touch on is something else that the Labour government have put really front and centre of their plans for the country over the next Parliament, and that is the Employment Rights Bill. And I'm not going to talk about the Employment Rights Bill in terms of actually what it means from a human resources and perspective, but I'm going to talk about it in terms of what I think it might mean from a tax perspective. And actually, I think there's quite a lot of impacts. So, for example, one of the key provisions in the bill is that you're going to be able to claim unfair dismissal from day one. There might be a small probation period that you're allowed or employers are allowed to consider someone's performance. But what I think that that's going to mean is it's that there's going to be an awful lot more settlement payments. And the taxation of settlement payments, both from an employment and from a corporation tax perspective, can be extremely difficult and challenging. In the employment space, it's really difficult because you never necessarily know whether or not something is a payment in lieu of a bonus or a payment in lieu of notice, post-employment notice pay, or it might be something that's subject to the 30k threshold. And that threshold is another thing that's been frozen. All the time that I've worked in employment tax, it's been at 30k. And a lot of these payments are going to be more than that. So I think that's going to be an area that's going to change an awful lot and going to be really quite complicated and confusing. Another aspect is the right to ask for more flexible working. That's flexibility in terms of the hours you work and compressing the hours. That's extremely difficult for hourly paid people for payroll systems to work out. It's hard for national minimum wage tracking. There's nothing easy about that at all. And it's also flexibility in terms of where people work. And that throws up a minefield around permanent and temporary workplaces, what can and can't be expensed, whether or not taxes can be taken, whether or not public transport can be taken. It's a real minefield of an area. And if you combine that with some of the areas such as temporary workplace relief, it can get really tricky really quickly. And the more people are working remotely, hybrid, in different places, and with variable and unusual hours, the more this is going to be a challenge. And I think the tax code just needs to be completely rewritten there, because these rules came in place in the 1970s and they're clearly just not fit for purpose now for people who are working everywhere. So that's my thoughts on the Employment Rights Bill. I think there's loads of areas that can make quite a big difference.
Some good points. Well made, Matt.
The Tax Factor from Blick Rothenberg.
So I think that's probably all we've got time for this week. Remember that we release a new episode of The Tax Factor every week on the Blick Rothenberg website and all of the usual podcast platforms. So you can listen wherever is most convenient for you. We record and release them in less than 24 hours. So you always get the latest news and updates. But next week, finally, after 16 weeks of anticipation, it's only a handful more sleeps and it's time for the budget.
I am incredibly excited about the B word.
And we're going to be producing a special budget edition of the podcast, releasing it a day earlier than normal. So you've got one less day to wait. Thursday, the 31st of October, Heather Self and Robert Salter will be poring over the budget detail and offering their thoughts on the Chancellor's decisions. Again, available in all of the normal places.
We've just released a new episode of our sister podcast, Brave Business. That's presented by Declan Curry. This episode is about global talent. And alongside Declan is our very own Rihanna Earl, looking at the topic of global talent. She'll be addressing questions like how do you attract the best talent in business, particularly when you grow internationally, which approaches work well and which do not, and how will technology, particularly AI, impact a global workforce. So like The Tax Factor, it's available on all podcast platforms and on our Blick Rothenberg website. But from us, it's goodbye and have a good weekend.
Goodbye.
That's The Tax Factor. We'd like to thank you for making us one of the UK's top 20 podcasts. Find all our previous episodes wherever you get your podcasts. And join us again next time on The Tax Factor.